This is such a Prejuman of Cirrus Research. The latest industry outliers report is out. It centers on the megatech run that we've witnessed. The title Megatech pierces the 30-year valuation peak over small technology firms. This chart, I think, is fairly dramatic. What you're looking at here is over 30 years worth of valuation comps between smaller technology firms and large. And so what this basically says is that as the numbers climb higher and higher, larger tech stocks are getting more and more expensive. And so what we're looking at now, if you were to go back as far as the 90s, the current multiples, the chase towards NVIDIA and some of the biggest firms have now really surpassed what we witnessed in the late 90s, early 2000s. And the reality is that this hunt for AI, the semiconductor rotation, these things have been very dramatic. The question is, how sustainable is this in a world where interest rates are still quite volatile? The hope is that the Fed will at some point pause, potentially ease, but with the multiples the way we've seen them climb, it becomes more and more difficult. This is especially challenging when we look at the fundamentals. Our Cirrus digital deflation indicator, this is sort of like what's the consumption or the consumption of technology goods and services and where is that going? That number continues to decay. So this is flying in the face of the direction of where share prices are going. And to some degree, this is why I also think that the leadership is narrower and narrower. So this is potentially a major rotation likely to occur. One, technology goods either slows down and therefore at some point creates a real gap in investors' expectations and share prices. Or two, the cycle continues to run but broaden in a material way, allowing the smaller tech firms to also benefit. The reality, though, is that one of the reasons we think the struggles with tech spending will remain also has to do with the industrial infrastructure complex. And that is, it does appear to us that the spending for industrials have begun to accelerate since really 2020. And what we're witnessing with technology goods and services is that the CapEx cycle has basically flatlined. So our point here is that this is likely to continue. If it does, the technology run that we've seen becomes more and more risky. Take a look at the report. We get into some of the industries that are most affected or potentially most at risk. And as always, be very happy to take your questions. Thank you.